Hey guys, December 24th, 2018. Whoa, the markets were actually open today? Yeah, actually, they were till 1 o'clock. Kind of weird, right? I actually heard from a few traders today that were like, wow, I didn't know the market was open today. Well, here's the deal, guys. Generally, these days, right before the holidays, right before Thanksgiving, before Christmas, they're generally not good days to trade because your volume decreases substantially. Here's what we were able to accomplish today in just 4 hours. I'm going to share the trades that were taken today, and more importantly, I'm going to share some key observations about what was actually taking place in the markets today. And here's one very important one. Again, sometimes you clearly do not want to be trading right before the holidays. But our 13 markets move formula was telling us that it was a day full of opportunities, and so we did take advantage of a few of them. Based on our 13 markets move formula, there's some days that are good for swing trading, and there's some days that are clearly better for day trading. So if you've taken the course, we specifically identify which market moves are good for day trading, which market moves are good for swing trading, and having clarity and understanding of that will literally help you out. So 13 markets moves. If you haven't taken the course, make sure you take advantage of it before the new year starts. Okay, guys, here's some of the questions I've been getting since I posted the last video. Okay, so now you've shown us how you turned 3K to 59K in swing trading last week. So what do you do next? And a very common question I've been getting is, well, do you just keep buying lowest strike on BKNG? Because a part of the video was I was showing how I bought some BKNG puts at 1670, then I sold them at one point in the day, and then I re-entered the position at 1650. So it is actually a very dangerous strategy. You should not be doing it literally like 90 to 95% of the time. It only works when the market conditions are favorable for doing so. So point number one is do not just automatically keep buying lower strike puts just because stocks continue to go lower. And I'm going to give you a little bit more detailed explanation in just a sec here. So the simple answer is no. You don't want to be buying lower strike puts just because something keeps moving lower. And you don't want to certainly be doing it blindly, because the way you make money with trading options that have short-term expiration, like a few days, weekly, bi-weekly, is finding out exactly what would be the ultimate entry point and timing when that particular move that you're expecting is going to be taking place. If you time your entry well, then your cost of entry is going to be the best. And so clearly you don't want to be in a situation where you're buying something high, trying to sell it higher. What you want to be doing clearly is buying low, selling high. Well, if you mistime your entry, then what you probably going to end up doing is buying high, and that's going to cause you to jump out of a good trade. And so entry and timing is key, and I'm going to try to bring some light as we go along. So the simple rule is this: after a huge consecutive move in the same direction, don't expect that move to continue in one straight line. So in other words, now you've got Amazon's been falling from 2050, hitting the low of 1307 today. Okay, don't expect that move to continue in the same fashion. Very important to understand that, because what happens is your probability of another 30-40% move in a great stock in a short amount of time, it has very low probability of materializing. The high probability becomes the fact that the stock could bounce. The high probability becomes the fact that the stock could go sideways. So just because something continues to fall right in front of your eyes and it continues to drop, does not necessarily mean that you should just jump in. A lot of times when you will end up doing that, it's going to hurt your cost of entry. So do not try to actually buy put options when something is dropping. So target entries and lower your expectations on the magnitude of the move. So in other words, if something has dropped 30% within 2 weeks, within the month, don't expect it to drop another 30%. For that reason, selecting a lower strike continuously within a short time frame is not going to be a successful strategy. Now, don't buy puts when stocks are falling. Clearly, I mean, these are basics, guys, but you'd be surprised how many traders I actually talk to on every basis. They're like, man, I knew that thing was going to fall, so the stock would open lower in the morning. They jump in, and then what happens? The stock bounces higher. So, but that point, they have paid the highest possible price for the day for those put options. So when the stock bounces, what happens? They realize huge losses in their account. They can't look at that anymore. What do? They close the position. As soon as they close the position, what happens? the stock starts dropping. So if they would have just held to the position, they would have made money. But because the losses were unbearable at that point, and I'm going to show you a good example in a second, then they had no other choice but to jump out. And so utilizing some of the strategies we teach in some of our courses, you can clearly avoid or at least be better prepared for handling situations like that. Wait for a bounce to enter your position. And so clearly we're talking about buying puts here, right? So you don't want to buy puts when stocks are clearly dropping in front of your eyes. Why? Because you're going to pay a lot for the premiums. And so if there's going to be not an immediate drop, if there's going to be a sideways trend or a bounce, then your options are going to decay and you're going to lose money, even if overall you got the direction right. So timing your entry is key, and it's super crucial and important. Let me show you real quick just some of the trades that we did take today, just to get the curiosity part out of the way. And then at the end of the video, after I share some observations, you can actually take a look at all the live trades that were recorded. But so trade number one, I was buying VIX 35 strike calls. Today's expiration. Yes, generally speaking, VIX weekly calls, they expire on Tuesday. Now, it's going to be weird, right? Because if you're trying to trade VIX calls, expiration is going to actually show Wednesday, but they are going to expire on Tuesday. And considering tomorrow's Christmas, these options would have expired tomorrow, if not for the holiday, but because of that, they were expiring today. So today's expiration, that is what I really mean by that. So I was buying them in the morning at 30 cents, and I was selling them between 50 cents, 55 cents, and 70 cents for a total net gain for today of 8,500. So you can see today, the expiration, as you can see right here, shows 26, but today is the 24th. And again, when you see the expiration on the VIX that shows a Wednesday, just please know and understand they are actually going to expire Tuesday. And it's kind of weird. You don't get that with stock. So if it says on a weekly option the stock is going to expire Friday, it is actually going to expire Friday. If it is an actual trading day, like in other words, if it doesn't fall on a holiday, which generally we don't have Fridays as holidays in trading. So it's going to expire Friday at 4 p.m. With VIX, it's different. With SPY puts, it's different as well, right? So just please understand when you're buying this and have clarity on when do these things actually expire. So at one point we're buying them. Anyways, here's the profit and loss for the day. I was buying some other ones. I actually was buying 40 strike calls at one point for 15 cents. I'll explain why in just a second. And so that trade actually ended up being a wash. So that's why you see a zero here. Also, somehow I ended up buying 124 call, and so that was just a $50 profit. So overall, 8,500 on this VIX trade today. So trade number two, bought GLD. Now, some of the ones I opened today, actually, they're not closed. They're still open, but at the current value, this is a 45.05 net gain so far. Trade number three, I actually got into trading the penny stock. In market environments like this, penny stock's actually not correlated to the market at all. So that's why, if you're a beginning trader, it's actually a lot easier at times to be trading penny stocks, because they don't have such a strong relationship with the rest of the market, for example, as Amazon or any other stock, really, for that matter, that institutional investors are trading. So when you deal with penny stocks, they're kind of in their own world. So ADIL, I bought some today. I bought some when it was trading at 439. I sold it like an hour later, hour and a half later, for 559 and 521. So total gain 10,068. Trade number 4 and 5, more various gold-related trades. So we're actually buying JNUG, $9 calls, gold, 90.95 strike calls. Those expire in about a month, 3 to 4 weeks from now. I think January 18th was expiration. So net gain on those, respectively, was 2,570 and 1,600. So about, $4,000 here. Trade 6 was BKNG calls. It was a tiny little trade just to kind of test the waters. I actually was buying calls, that's right. So 2 contracts. In the previous video you saw me, I was buying puts, and I stayed with the puts the entire day. Here I was buying calls. And so on 2 contracts, just a tiny little profit, $200. On trade 7, I really focused today on trading Amazon rather than BKNG. I actually had a few trades going on Amazon, and to just show you, you will see in the live recording, how I'm actually buying calls and I'm buying puts. And so that was my only losing trade. And the trade itself was good, okay, but I ended up locking a loss on one of the trades. I had 2 wins, and so out of all the trades I've taken, that was the only loss today. But for net gain on Amazon, basically 28,855. Notice I was trading compared to the previous day more calls today, and clearly, gold would have sort of an inverse relationship, and so is the VIX. But you see that I've actually trying to measure the temperature and buying some calls today. And I'll share with you in just a second why. Now, if you want to clearly understand specifically every trade, there were so many as far as the way they were executed, right? But here they are. If you want to pause the video and if you really feel like studying this, I mean, they're here, but like generally speaking, you saw me here. I was buying GLD calls. You see 121 strike at 54 cents. Then I was buying Amazon calls. That was the only losing trade. I was buying it at 30, ended up getting out at 23. But later in the day, that changed because I was buying actually Amazon calls, and I made money in those. As you can see, if you study this, you'll be able to see and understand that. So here's the ADIL trade. I was buying it at 438, 436, 438, 439. So overall, probably about 438. 5,000 shares, another 5,000 shares. Then later, you can see I was selling them right here. Sell 2,500 shares, ADIL at 559, 558. Now notice I was buying these ADILs when at 9:52 in the morning, and I was selling these ADILs at 10:26. So literally in like 30 minutes, okay, those were the gains. You saw the gain of about 10 grand. Literally, that didn't take too long. I've gotten out of the trade and ended up being a very good decision. Okay, next, sell all of them at that price. I did end up selling the other 5,000 at around 521. So these trades were taken between 10:50 and 12:59. So as you can see then, I bought some Amazon puts when it went all the way to 13.91, and I was buying these at 25.9, and later I started selling them at 37, 40, and I sold majority of them for around 44, 43. So pretty close to like doubling the money, not quite, but considering it was only like a 4-hour trading session today, I mean, this is actually not bad. All right, and then you can see how I was buying some gold calls that were strike 90 and 95. I was buying some more GLD, the 122 calls. So you can see all the trades if you want to pause and look through it. It clearly tells you. So the buys are going to be in the green, and the sells are going to be in the red. And you'll see the price. And you'll see the time right here when the trade was taken, when it was executed. So if you're curious to go through every one individual and check them out, feel free to do so. Here are the few key observations for the day. VIX. Been talking a lot about VIX, and here's the significance of VIX is in the last 5 days, VIX have gone from 21.94 all the way to 36.1 today. Now, the most important observation of this is the fact that VIX have actually gone from 31 to 36, which percentage-wise is a huge change. And the most important thing is that it's doing that on December 24th. I mean, Christmas Eve. Are you kidding me? I don't think VIX has actually done this anytime in the entire United States history where it had such a huge change percentage-wise from 31 to 36 on the verge of Christmas. So that tells us that we are in a totally different market environment from where we have been. We have been advocating buying VIX calls, like literally we started doing it in August, and then we've done a lot of videos recently on buying VIX calls, and including like the last 3 videos we've talked about it, and the chart was extremely bullish. So guys, it goes back to noticing the divergences on the chart. So about 10 days ago, the VIX was like at 16 and it was falling, but the divergences on the chart showed us that it could actually reverse and go substantially high, and that's what happened. When you look at the longer time frame on the chart, it was also showing a cup with a handle. Recently, I was basically notifying our subscribers that it could break out anywhere from 30 to 50% near term meaning like 2 weeks. And I mentioned that this morning when it was trading around this 31. So clearly, a lot of that move has taken place, but it's still got room to go. Now, keep in mind, things do not automatically just rocket higher. They could take a pause. Clearly, as you can see, if you just look at this chart, it's not a one straight line higher, right? I mean, you can see how it goes high, it pulls back, goes higher, pulls back, goes higher, pulls back. But overall, I mean, this is an extremely bullish chart. This has to be the most bullish chart in the entire market. And clearly, it's got the inverse correlationship with the market, and that's why it's so bullish. You know, it's amazing. December 24th is the time when the VIX is actually breaking out. This is how the markets are. They do things when people least expect them. So you probably heard a ton of commentary in the media how, you know, the New Year rally and so on, the Christmas rally, the Santa rally, whatever, you know, they call it, but we got exactly the opposite of that. And so we've been trying to prepare our subscribers, our alert subscribers, VIP subscribers, that this was going to take place. A few months ago, I actually dared to say that VIX was going to go all the way to 70, 80. Now that probability looks a lot more promising, not because it's finally, you know, at 36.1, but because it is actually, because we're actually noticing a substantial amount of contract activity at these strike prices going for the next month or 2 months out in expiration, where people are actually buying and loading up on 40 strike calls, 50 strike calls, 60, even 70 has got quite a bit of an action today. They were actually buying 33,000 contracts today, early in the day, of this 35 strike when the VIX was trading at 30. So to me, with the fact that these are expiring today, I mean, this was phenomenal action. And it tells us nothing but the fact that we have further downside. However, very important thing to keep in mind, again, nothing goes straight down in one straight line and nothing goes higher in one straight line. So expect that the VIX could pull. And if the VIX pulls back, then this is a buying opportunity on the VIX calls. And so if the market bounces, it's actually a shorting opportunity. But at this point, the market has come down so substantially that, you know, you could expect a bounce at any given moment. Look, the only other chart that is as bullish as VIX is gold futures. And we've mentioned, because of our stagnation theory, and, you know, we basically said in September the rates were not going to go higher, they were going to go lower. And we noticed some buying activity in gold futures. That was part of the reason why we have identified that, because clearly if interest rates goes higher, then gold is not supposed to go higher. Generally, with higher rates, gold falls. But we've noticed that institutional investors were actually loading up on gold back in September, and that trend has continued. And we've advised our subscribers to carefully start initiating gold positions back in September, before the market started dropping, before gold actually made a substantial move now and traded today as high as 1273.9 on the gold futures. So very, very bullish action. Between these two, what does this really tell us? Between the VIX chart being super bullish, hitting 36.1 on Christmas, and gold futures hitting a recent all-time high the day before Christmas, I mean, the flight to safety is in full progress. I mean, people are running to safety, and we can clearly see this between these two charts. Now, here's an important observation that's actually slightly controversial. So the tech stocks showing signs that short-term bounce could come at any moment. Just think about it this way. If everybody all of a sudden gets bearish, okay, yeah, the market could have a substantial drop. But again, keep in mind that these drops, they don't happen all in one straight line. There is a good probability that after so many consecutive days lower, which at this point we're about 7th, 8th day lower, the probability that we're going to move substantially lower is not as high as the probability of going sideways or having a short-term bounce. Now, short-term bounce could be 1 day, could be 2 days, could be 3 days. Even though these bounces are going to be short-lived, do not discount just because all of a sudden everyone is bearish. See, very few people were bearish, you know, last year when we started talking about an upcoming market crash on this channel. You know, nobody wanted to hear about it. And so now that it's evident to everybody, everybody wants to talk about it. Well, there's only one thing to compare this to. Everybody was crazily bullish on Bitcoin last year when it was hitting 1820K. Okay, so we have a reverse of sentiment now. The idea here is when overall majority becomes either over bullish or over bearish, it also could be used as a signal of a reversal. The more people get bearish, if we get a sentiment, bearish sentiment that could be compared in the magnitude of the sentiment itself, to the sentiment of Bitcoin last year, if everybody just starts jumping for exit, yeah, we could have a substantial drop from here, but it's going to result in a strong bounce. So be ready for it. And some of the historic things that you could be looking at is, looking back in 1929. Yeah, many people don't realize that after these crazy crash in 1929, guess what happened? The stocks rallied in the following 12 months like crazy, and then they dropped again, which resulted in this longest bear market in the history of the United States. Keep this in mind. Just because things are looking like they're falling right now, it does not protect you from a bounce. So the whole point here is just be careful. When you see things like this, so here's an example of why you should be careful. Amazon, $90 move higher intraday. So initially it opens lower pre-market, it drops lower, hits 1307, but look how fast this rises, right? It literally goes within minutes from 1307 to 1390, 1396. It would be one thing if, let's say, it got to this level right here, 1360, and it paused, because that would have not closed the gap, but it actually closed the gap. This is a percentage-wise, this is a pretty solid move right here. It was not happening on insignificant volume. The volume was actually going higher here, which we have not seen higher volume on the upside in a while in the stock. So notice that for the first time, and I know this could be argued, but I think it's something to actually notice, because it did not close at the lowest point of the day. The markets like S&P 500 and NASDAQ, they did close at the lowest points for the day, but Amazon did not. Okay, see, this was the low of the day, 1307. It closed at around 1343, 1340. It did not close at the lows of the day. It closed quite a bit higher than the lows of the day. Also coincided with this level right here, 1340. So this could be something to be paying attention to. It does not mean Amazon all of a sudden is not going to drop in the next couple of days, but we can see some buying activity. There's see some spikes in some buying activity. Another stock that basically did the same thing is Google moved $40 higher intraday. Right, and Google is trading, would touch the level, a very good support level of 1976, 1980 roughly. And look, it touched it the previous trading day, today, pre-market, after market. Like, it's holding this level of 980 pretty solidly. So, I mean, this is something to pay attention to as well. I think this is what's actually taking place. Finally, selling in Microsoft is taking place. What I think people are doing, they're selling Microsoft. And oftentimes when institutional investors sell a particular sector, that doesn't mean, let's say, they sell technology stocks to go ahead and buy biotechnology stocks. It doesn't work like that. So if they're selling some technology stocks, they will have to find some stocks within the same sector to buy. I think what's going on is they're actually selling Microsoft to buy Amazon. Now, why would they do that? Well, notice the distinct difference. Now, Microsoft shares have refused to fall with the rest of the market for a while. And when we compare the percentage drop, let's say, between Microsoft and Amazon and Google, Microsoft has not dropped nowhere near the levels that some of the other high-quality technology stocks have done already. Notice the difference. Microsoft clearly has the bounce intraday, but look, it hits the resistance, and Microsoft does close at the very low of the day, which is considerably different from the way both Google, let me take you back to these charts, considerably different from the way Google and Amazon. So Google had, and Amazon both had the spikes, went above their resistance levels and did not close at the low. That's not what we're seeing in Microsoft. So that makes me think they're selling Microsoft, they're buying Amazon. That's why you see spikes in Amazon and Google, but you're not seeing the same sort of spike, nowhere to the magnitude that you're witnessing in some other technology stocks. And just to bring this into perspective, so yes, finally Microsoft gives in, which tells you, yes, the bear market is here because some of the strongest stocks that have been supported by institutional investors, they actually will fall last. And so we're finally seeing this is what's taking place. Look at this huge volume, right? The huge volume, it finally breaks below these very important level, this blue line, this 50-day line. It does that the previous week, and today, however, yeah, they're still selling, but the volume is subsided. And of course, you can argue it's because it's half a day and it's the day before Christmas and so on, but it does make an all-time low for basically a year, right? So the last time I traded in this 93, 94 level was like pretty much close to a year ago. So important to observe that some of the best stocks that they have held up really well in relation to the rest of the market. They are finally breaking down, but I think people are starting to, not people, but well, they are people too, the institutional investors that invest the big bucks, right? What they're realizing is the fact that some of these stocks, like Amazon dropping from 2050 level all the way to where it traded today, right? 1300, almost touched 1300, 1307. So look at this percentage drop, right? And compared to the percentage drop of Microsoft. So I think they're selling Microsoft because they're like, man, this is a really good deal. And they're starting to buy. It does not mean, again, that Amazon is going to stop dropping from here. It does not. But I think this is something to be paying attention to. Also, the way this candle is formed. Again, see this tail that's sticking. This is a bit of a bullish reversal right here. Last time we've had a similar candle like this. See what happens the next day, the next few days. We have a major white candle going higher. So it doesn't mean it's going to take place just like that, but it is, again, it is something to pay attention to. And the reason I'm emphasizing this so much is because, you don't want to get caught off guard building a very bearish position right now just because everybody all of a sudden realizes, okay, there's no center rally, the market is going to hell, it's dropping, and so everybody's jumping in and building the short positions. But it's too late to be doing this, honestly. We've been shorting Amazon when it was at 2000, 2050. Some of the institutional investors, let's say they didn't short it at 2000, 2050. Let's say they shorted it recently at 15, 1600. I mean, if it drops another 50, 60 bucks, some of them may consider actually closing out their shorts. And when everybody, or a lot of people, are going to start closing their shorts, that's actually going to cause the stocks to spike higher. So just keep this in the back of your mind, okay? And let's not forget about the art of the deal here, right? So Trump is known to move the markets with his comments. We have not had a successful tweet from Trump that has moved the markets recently. All of his recent tweets about the trade deal with China has failed. But don't forget, they did produce temporary bounces. The magnitude of the bounces have diminished on his tweets, but maybe he can come up with something, right? So just don't disregard the fact that he could. Whether it's true or not, it doesn't matter, right? What matters is how the markets will react to what we could see potentially come out of his tweet in the next, let's say, few days or a week. So anything that comes from him, and clearly he's got to be concerned because you don't want to be associated in the market crash with his presidency. So he's going to try to do something, and he may catch the markets off guard. So I don't want you guys to be caught off guard on the put side at this point because I think it's definitely in the cards that he is going to try to do something. I mean, clearly he cannot just go and blame the Fed, which is a good strategy to switch the direction from his presidency being responsible for the market crash and try to switch the blame on the Fed. But that's only going to work for so long. I don't know. Could they announce stimulus? I think it's too early for that, but who knows? Who knows what's going to happen and what he's going to do. Stimulus meaning, clearly he's not the Fed. He cannot say, well, we're going to, announce another round of stimulus or we're going to slow down the rates. He can't do that, but what he did do last year is he announced the tax cut. So maybe he can announce something similar. It would have to do with the fiscal policy that could, have a positive market reaction. So just don't disregard that. Key takeaways. Don't be caught off guard by temporary bounces. They are characteristic of every bear market. And again, some of the greatest examples are when the markets were going significantly lower within a short amount of time, but they bounced quite a bit before they resumed the drop ultimately. Okay, and this is just a few years where that sort of action have taken place. 1987, not as much because after the initial drop, the market continued the bull run. In 1929, again, the market dropped. It bounced like 50% and then it dropped for good and stayed lower for a very long time. 1962 was another one of those where the market dropped like crazy and it rebounded, went higher all the way from 1968 before the bear market began in like 68, 69 again. So keep these things in mind. Nothing falls infinitely. And you should be expecting a bounce because we've been going lower for a great number of days. But what should you do with the bounces when they do happen? This actually presents an opportunity to short the market rather than be loading up on calls. Okay, guys, with this being said, if you wish to learn more and get ready for a stellar 2019, click the links below. Learn more about how to understand charts divergences, how to read the charts that could point out to a move before it actually takes place. And if you're looking to learn more about probabilities, how to identify the days on which you should trade where your probability of getting the direction of getting significant traction with trading options is going to be much higher. Take the 13 markets move course by clicking the links below. And hey guys, now enjoy all these live videos showing you the trades that were taken today from 59 to 114. And I'll catch you guys on the next video. Thanks. Here guys, I'm buying 300 VIX contracts that expired today at 30 cents, 35 strike. Well, they only let me buy 3.
Senior Treasury official tells CNBC purpose of Secretary Mnuchin's calls.
Okay, so they actually did sell me the VIX calls. They're way out of the money, and they expire literally in the next 3 hours, which is pretty crazy. So we'll set a limit order to sell these. VIX rate of change, I mean, it can easily go and spike, another 5, 6 by the end of the day, just that 30-point rise, 30% rise basically. Okay, we actually are going to take just a trade on ADIL. We're going to buy about 5,000 shares right now at 434. Okay, got him. I'm going to buy 5,000 shares more. Okay, so we own 10,000 ADIL. The reason I'm doing that because the options are so overpriced on some of the stocks like Amazon, BKG. It's almost impossible to get like huge gains because each option is like $5 grand. So I'd rather use some other strategies. And I know the market is crashing, but penny stocks are trading quite differently. They're not necessarily they don't have as strong of a correlation with the market. So in other words, the market could be dropping, but penny stocks could still be going higher. Here it is, that ADIL. Got a position in that. So expecting just a quick pop, maybe like $1 or 2 higher, and we're going to try to get out of that. Got 10,000 shares there, so we're going to try to set the limit order to get out of that position, right? And set a limit order ADIL. What do we have? Yeah, we have 10,000 shares, so close position.
Crude futures falling to 44.52. That's the lowest level since July
Oil is falling.
Last year.
Okay. Oil is falling. ADIL going high. Okay, so let's do like a 5.5. Let's sell maybe 5,000. Okay, so the markets continue to sell off. So instead of buying the puts on like AMZN and BKG, what I did do is I bought 300 calls on VIX. And so they're 35, and we only got 3 more hours on these. But based off the rate of the sell-off and observing the pre-market volume, typically the pre-market volume is not going to be crazy like it is today. As a matter of fact, we're not seeing this kind of volume on the downside the day before Christmas on a half trading day in the markets in a long time. So using this observation, basically today's the day where the VIX could really break out. It's setting on the new high for the day, so if it does break out, could easily close at 38.39 today in the next few hours. So if that takes place, then this 300 contracts are going to be worth quite a bit. And we're only paying 30 cents for them because they expired today. So this is a trade that is like highly, highly risky. But if it does work out, could be highly, highly profitable at the same time. Okay, let's review some of the other positions. GLD. So GLD is one trade that's actually making money. It's breaking out, and so we own some calls on GLD. We own some calls on JNUG. And so both of these are heading in the right direction for us. VIX is heading in the right direction. And we got this crazy trade of the day, ADIL, the penny stock. Question is, will it move a couple of dollars higher? I think it actually has got a shot at it. So we'll see what happens. The market's crashing and ADIL is going to the moon. There it is. Well, not yet, but that's what I think is going to happen. Okay, guys, so the VIX calls I was buying earlier, I just got out of them basically at a pretty decent price. Here, I'll show you. So on the VIX calls, basically we made 85 100 on that. You've got, they were expiring literally in a couple hours. And so I was selling them, I was buying them at 30 cents, and I was selling them at 50, 55, and 70 cents. So basically, we've doubled the money. As you remember, I was buying 300 at 30 cents. So the total cost of the trade was 9 grand. And so that was the P&L. And so we're able to actually accomplish that within the last hour on the VIX trade. So that's the VIX trade for the day. That's how it went. That's what happened. Okay. In the meantime, we've got ADIL. We bought 10,000 shares of that, so that's actually going higher. And overall, the reason we sold the VIX because it looks like the market is finding some ground. So we may see actually things going higher. So we don't want to be in a situation where we keep holding on to these VIX calls because it looks like the market has found ground. So actually, what we want to do is let's go ahead and sell some of these ADIL, at least like 5,000 shares, right? And that'll clear up some funds to actually go ahead and buy some calls on some of these things. So let's do these at market. We'll sell DIL at market right now at 558. That's fine. I have a problem with that. Okay, done. So we sold. Okay, no, so we've got, okay, so now we've got some funds available back to trade again. And there's the situation with ADIL. That's what we, ADIL. So basically 12K profit, right? 11.5. So we're buying it at 439, and I just sold, as you saw, I just sold some, like literally $1.20 higher. We might have hit the lows for the day already, and so what we really want is to see if we're going to revisit the lows and get close to the lows in the next few hours. If we can identify that, then we're going to be able to put together a successful trade. So the general strategy is to short the bounces, but the market has been dropping, so you don't want to start shorting the bounce too early because the bounce could continue, let's say, the next trading day. And so if you start shorting the bounce too early, that could also lose you money. But in any case, you saw we started with 59, so we're at 70.7. That's where the account is at. So our goal is basically to identify when would be a good time to short the bounce. What we are going to do is we're going to buy some Amazon 1,400 calls. Let's see what we can buy. Let's buy 15. We'll try to add more as we go. Okay, so we bought 15 calls, everything's flying. Okay, so let's just go ahead and buy BKNG calls. That's fine. Done. Bought one. Let's see if I can buy one more. Okay, so 2 calls on BKNG. We got these 1650 calls. Okay, guys, so after this market spike, okay, the general strategy again is to short the top. So when Amazon got to this level of 1390, 1391, we actually bought some 1360 puts. So it tried a couple of times to take out that level. It failed. So this is a pretty good probability position now. As you can see, we got 20 contracts. After the bounce, we're calculating to probably revisit the levels it said earlier of about 1320, 1330. So depending on how quick it does that, we may be able to close these. As you can see, as always, I set them at different prices just to make sure I don't miss out. Okay, surprisingly, the action in VIX calls is like absolutely ridiculous today. They're really selling VIX for extremely high premium, which we have not seen in a very long time. Literally, they're selling VIX out of the money for like crazy, crazy premiums. So that tells us that everybody at this point is pretty much convinced there's going to be a further drop. And if, they're, I mean, just let me show you, right? So we've had a position, we got out, and we did okay on it, right? Look at this. I mean, they're even buying the 50 strikes. They're basically in the next few hours, they're expecting the market to drop much lower is what this tells us right here. So there it is, VIX at 33 now. They're thinking VIX is really going to finish above 36. Otherwise, there would be no point buying in these VIX calls. Okay, so staying with the same positions, right? We've got some gold contracts were bought earlier, like GLD, and it's starting to finally spike up. I think our position is going to appreciate quite a bit once these are going to roll over the 120 level. As you can see, the account is slowly growing, 89, 88 level. The main position that we're trying to profit, of course, is this Amazon. So if we calculated everything correctly, it should retrace back to this 1320, 1330 level. Depending on the speed of the drop, we can get some execution in this, and they'll easily put us over the 100 mark. That's what we're waiting. Considering it's a short session, generally you don't get this sort of opportunity of volatility, but based on our market moves sequence, it does tell us that the chances of that are quite good. So we want to stay with the position. We don't want to panic when the stocks are reversing and they're trying to go higher. Actually, we just want to hold on to this position because our entry level was good. We were shorting it right here at 1391 roughly when the price was here, and we're buying these 1360 puts. So pretty quick here, we should be in the money. And even though tomorrow's Christmas and markets will be closed, we're still going to have pretty good 3 days ahead of us, Wednesday, Thursday, and Friday this week. So these contracts, they do expire this week on Friday, 4 p.m. Okay, guys, so I actually sold just a second ago one contract of Amazon, so I got 3,700 available. So actually what I want to do is buy these VIX calls. Now the premiums on VIX have been going through the roof. Let's see here. VIX is expiring the next couple hours here. Let's see what's going on. So these 35s, remember we're buying them earlier for like 30 cents. Well, now they want some crazy money for those. So I'm not sure if we're going to be able to put a trade together here. But looks like everything is just, look, even on these, right, what we're going to do is we're going to try to buy like 100 of these at like 10 cents. And they're 40 calls. Based on the activity I've seen in the 35 calls, here, they don't want to sell them to us. Forget about it. I'm just going to buy 200 at 15 if I can. That's what I'm going to do. Cancel, replace. 200 calls at 15 should get us there. 225 calls at 0.15 should get us the position we want. Okay, they only sold us 32. They only sold us 32 contracts. That sucks. And so now they've raised the bid to 20, so clearly I don't want to be paying 20. I mean, that would be pretty crazy. We'll just keep this order open in case somebody gets chickened out and they decide to sell it to us. We'll have a pretty decent position. In our calculation, the VIX should... Hey guys, what I want to do is I've got 3,000 available, so I want to buy these 122 contracts on GLD. And we should be able to buy about 150 of them with that, probably 140 at 19 cents. So let's try that. Okay, yeah, only got 9. So let's change that and change the order. Let's try to buy 0.2. That's fine. Let's just buy them. Okay, so how many? 40. We need. Okay, so what we want to do is we want to buy another 100 at 19 cents. There it is. Let's go. Okay, looks like we bought them. Okay, anyways, guys, so here was the hour calculation, right? The fact that this was going to top out here, short to bounce, then it drops. So watch the VIX. It's about to go through the roof, right? And let's see. This is the gold. We were just buying GLD. So that should break above 20. And when it does break above 20, it should really give the strikes that are in the range of, let's say, 121, 122, 123. It should really give a really good boost in the premiums of these contracts on the call side. So that's what we're basically calculating. Here's the VIX hitting basically a recent high for the last 11 months. The question is, before we know, it should reach a level of 55 where it was trading in February last year. So that would be a crucial moment because it's coming off such a strong foundation where it's been trading in the last couple of months in between the range of 16 and 25. It finally broke out of that range, created a cup with a handle, and so from here we can see this thing just literally shoot to the moon. So our calculations, some of the strategies we got here today are based on the VIX breaking out and going higher. And so here's the high of the day on GLD. It's got a position here, right? So almost hitting the high of the day on here. We're expecting further drop right here in AMZN. Okay, guys, sold some Amazon contracts tomorrow. I really want to buy these VIX right here at 0.75. So let's see if we can buy like 100 at 0.75 right here. 100 of these contracts. Oh, we can't. They just raised the bid, the buy, raised the ask. So that's how it bid at 75. Yeah, it doesn't look like that's going to work out. But at the time I was placing the order, I mean, it was really there. 85. So maybe if we buy at 80. I mean, they keep buying the heck out of these contracts. So look at this. They bought 33,000 of these today. The question is, why are they buying them for today? I mean, there's no reason to buy them for today unless you think the market is going to go significantly lower in the next 2-3 hours here. It's 11:52 a.m. on a, you know, almost a holiday on Christmas. The day before Christmas, they're buying 30,000 VIX contracts that expire today. I mean, that's compared to the entire open interest at 32 until today. That's pretty phenomenal. So maybe we should just go ahead and even pay 0.8 for these. Just see if we can do that. Let's just buy them. Just buy these guys. Hey, no, they don't want to sell it to us at 0.8. I mean, it really looks like we're going much lower. So, I mean, clearly I understand why they would not want to do that and sell that to us. I mean, see, now they're raising it. Now somebody's outbidding me at 0.85. Okay, guys, here's what we're going to do. We're actually going to buy some gold contracts now, not GLD, but actually GOLD. And so we are going to buy these 95 strike. Actually, we're going to buy these 90 strike calls. Certainly nobody could think it could go to 100. So, I mean, let's just see if we can buy these for 20 cents. Of course, these are going to be a better deal. So let's try to buy these. Let's see what can we get. Let's see if we can buy 50 at 35 cents. Oh, cool. We bought them. All right. Let's get some more. So sometimes I don't like to put a big order in because it scares the sellers. They may not want to sell that many. So let's buy another 50. See, this time they don't want to do it. They figured me out. They figured out that I'm trying to build a bigger position. So, all right. Well, we'll just keep that order open there. And what we probably want to do is we want to buy these 90 calls as well. So let's try to buy some of these in the meantime. Let's try to buy 50 at 185 here. Buy.
U.S. Treasury had concerns on liquidity ahead of call with regulators that
45.85. 40 at 0.9. Yeah, okay. Bought the, all right. Okay, guys, we got 49 minutes remaining in the session. You know, it's Christmas. The markets close at an odd time of the day today, 1 p.m. So right now it's 12:11, and we got 49 minutes to go. We've got 17 contracts remaining of Amazon. They're 13.60. They're in the money. It's a pretty good position. The question is, would like for the selling to accelerate because I don't want to hold all of them overnight. I want to sell some. And so we got some strikes set to sell these at 55 and 65 accordingly. Let's see if we're going to hit these sell orders. Pay attention right here to the value that's shown here. As you can see, just with 17 contracts, this has quite a bit of an impact right here. Now, we do have a little bit of an impact from this gold position because we bought a ton of options. Now, these don't expire today. These are expiring this week and next week. The main position sort of right now is just this 17 contracts right here of AMZN. 1:15. We got 49 minutes to go. It's worth to take a notice that VIX is actually just hit 34.6, the highest it's traded in 11 months. Okay, guys, we got 18 minutes now to go. It's 12:42 on Monday, the 24th of December 2018. The market at this point looks like it's finally catching some equilibrium. In other words, it does not want to drop. We may still get a little bit of a drop here in the next 18 minutes, but at this point, we're not looking for a substantial drop. Some key notable things for today is the fact that VIX did hit a high level of 35 intraday. May still maybe revisit that in the next 18 minutes here. May actually go above that. But the crucial point is the fact that I've been showing on the chart. Let me see if I can bring that up for you guys. So the chart was the VIX chart. I've talked a lot about it in the videos when it was trading in much levels, right? So if you've been following the channel, you probably remember I posted the video actually back here in August when it was at 11, saying it was going to go higher. But more recently, we've been focusing on the VIX, and I've identified this right here as a cup with a handle. In the last video, I was saying that it was going to break out. And once this cup with a handle patterns happen, a lot of times you will see a 20, 30, instances 50 to 100 to 200% breakout in the stock or the Indus or the commodity, whatever that may be that you're examining on the chart. So if you're trying to learn more about charts, definitely click the links below. Don't waste any time. Order your chart course so you can identify exactly what is the next move of some of the things that you're watching and you're trying to trade. The new year is just around the corner. It's going to present a ton of opportunities, guys. So study up before the markets open in January 2019 and be ready to take action. Okay, last 3 minutes of the trading session. It's 12:57 p.m. What we're observing is the markets are trying to retest the lows of the day established earlier in the day. However, we've seen a bit of a divergence developing in the Amazon. Once it touched the 1340 level, it was hesitant to fall further and actually staged a small bounce. So ideally, we don't want to hold these, even though they're not expiring today. They've got till the end of this week. But what we don't want to have a situation, what if Amazon could open a little bit higher on a Wednesday? That's definitely could hurt the option values. And just going into the end of the close, looking at this behavior, it really makes sense to just close this out and just restart the trading going into like Wednesday, Thursday. So that's exactly what we're going to do. Considering we've got 2 more minutes left, I'm trying to find the best possible way to close these.
Just ahead of the close, the S&P futures down 56.50, Dow futures down 568, NASDAQ down 119.
Basically what I'm waiting for, if it makes a dip like $4, I've got an order. As you can see, my orders are sitting right there, not far from there. So if it dips, I just want to close them out. I want to start a day fresh. Now, if it doesn't happen in the next 30 seconds, I'm actually going to start closing them out manually here. So I'm going to switch some of them to lower amounts. If the move lower comes, it's no problem, they're going to work. But considering we're pretty much 1 minute away, I want to make sure I close these. Okay, so we got some sold. We still got some more. We got 10 more left. We sold 5. Okay, done. We're out. So at this point, it is dropping, but hey, we cashed out. Currently, we are at 113.9 for the day. So from 50 to 113, it's a decent result considering that this session was only like half a day and it's the day before Christmas. We're gonna, oh, look at that. What a nice surprise. VIX is at 35.47. We've been calculating this, we've been expecting this, and so that's exactly what's happening. So that's a good thing because it tells us that our calculations pretty good. All right, guys, with this being said, let me just review the positions real quick. So GOLD, we got some calls. So we have 100 contracts at these 95 strike right here. We got 40 contracts at 90 strike. So on these, we're showing a profit of 1,800. On these right here, we're showing a profit of 770 bucks. Okay, let's review the next trade was GLD. It's also a gold trade. So on these, we got 230 contracts. We're buying them around 50 cents. They're 72 cents now, so making about 4,100 here. We got 150 contracts that expired this week. This is a very high risky trade. If it does work out, though, the percentage returns are going to be substantial. So, but right now, making 334 on that. All right, next trade, JNUG. Okay, got 240 contracts of this, making 1,600 bucks so far on that. Now, these are all the trades that I've taken today. I'm sorry, guys, I couldn't record every single trade as I was getting in and getting out because today I was taking more trades because it was a shorter day, and you know there were some concerns because all of a sudden I noticed how some stocks like Amazon, you know, they were hitting the lows of 307, but then when they make these huge bounces, like to the extent of $90, that is something to pay attention to, right? And so clearly you don't want to, when the market was opening lower, and I noticed that it was doing that on high volume, a lot of people already been getting out of Amazon. You have to be cautious, actually. You don't want to be buying puts when something is falling. So I was actually buying calls, and initially I miscalculated the timing of the trade. It was a good trade, but it ended up being a bad trade for me. So here it is. You can see where we ended up with Amazon. So here's the initial trade that I've taken, right? It ended up losing 10 grand. Then I've taken a trade on the call side again. So being on the call side was the right thing for the majority of the day on Amazon. And so I miscalculated the entry. Ended up taking a hit right here for 10. Then I've corrected it by making 7,800 on initiating another call side trade on that. And then when it got close to the 1391, 1392, I was able to nail the top. And so as you can see, the entries do matter. So you can be right on the trade direction. You could still lose money. But when you got the right entry right like this, when I was able to nail the top, so you can see overall it was a 31K profit on Amazon. So altogether, right, I've got 2 winning trades on Amazon and 1 losing trade for a net of about 28K. Yeah, actually this is P&L. So 28,855. I've shown you what the other ones were doing, and let's see what else did we take a trade on today. Yeah, BKNG, I actually did that just on the call side, and so that was really nothing. I only traded 2 contracts on this, and they made $200. That was interesting because actually for the most of the day, if you take a look at the BKNG graph, it was going higher. Right, so BKNG, right, actually when most of the market was negative, it still maintained it. Actually traded above last day's range. I was trying to get back to that 1650 level a couple of times. Oh, last trade I forgot to go over, it was the VIX, right? So the VIX trade, initially when VIX was dropping, we were buying the VIX calls 30 cents. So this is how the VIX trade looks. We're buying the VIX calls at 30 cents. We sold them shortly after that, like within an hour, for a profit of about 8,500. So those are pretty much all the trades I've taken today. And the last trade I've taken on VIX, I bought 42 contracts at 15 cents. They were actually 40 strike calls, and they didn't work out. I ended up selling them for the same price I bought them, so that was a wash. Bought them for 15 cents, sold them for 15 cents. The trade I placed earlier, they got out. I got out kind of just slightly earlier, and not bad. I mean, this is pretty much what I would have gotten if I waited till the end of the day, because it did close in the money by 80 cents. I was selling them for 55 to 70 cents, and I was buying them at 30 cents. So, I mean, that, all right, so VIX continues higher after the close. Amazon continues to drop after the close. So, unfortunately, for today's position, this Amazon in the drop could have taken place earlier. Then you could have seen the account substantially higher, maybe 130s, 140s, 150s, but it kind of took a small bounce here towards the end. And so overall, we didn't lock up nowhere as much as we could have. But overall, you know, I've taken a bunch of trades today. I've got 1 trade on, and I had 1 wash. And so a lot of these, as you can see, I've been buying a ton of contracts on GLD. I've been buying a ton of contracts on gold, ticker GOLD. Been buying a ton of contracts. Now, keep in mind, like gold, that's a stock. It actually does not trade weekly contracts. So the monthly contracts on these expire on January 18th. So when I was buying these, you know, these are not going to expire for a few weeks. And this is kind of a long-term trade. Now, it doesn't mean I'm going to stay in this trade, you know, for the entire 3 weeks, but it means I'm targeting a bigger move here within the next couple of weeks in this stock right here, GOLD. All right, guys, here it is. To identify some of the better days to trade, I've came up with a 13 markets move formula. You can certainly get the course studied. It's 5 hours of information, specifically how to use the formula, how to identify the market moves, how do the sequences work, the winning sequences of the market moves, and which ones are not. So very important, you know, if you're trying to really take your skills to the next level as far as day trading, check out the course. I guarantee you, you will be eye-opening. Catch you in the next video.